Today we're going to be talking about a little trick that you can implement in your trading to make sure you're always using proper risk management. What's going on, guys? My name is Jeffrey Rodriguez and welcome to another video. If you want to learn how to trade Forex using technical analysis and price action and all kind of other Forex related stuff, then make sure to hit that subscribe button and that notification bell icon so you don't miss anything. You guys have to understand the importance on risk management. It's something that's going to keep coming up because this is normally why most traders fail. Now, I've already made a video going over like the amount of your account that you should risk, the percentage size, all that stuff. So if you want to check that out, you can click the little link here. So with that being said, let's go ahead and just jump on my computer and I'm going to go ahead and show you guys what I'm talking about in terms of proper risk management and the little tool and trick that you can use. So here's a little tip I like to do based off of the account size that I have and how I like to calculate my risk in terms of max risk versus minimum risk. So for this example, if you have a $100 account and you wanted to do the max risk, then you can use 0.10, so 0.10. Now, if you want to use the minimum risk, you can use 0.01. All right, so by using 0.01, you're giving yourself a lot more room in terms of drawdown potential. So for this example, say you have 30 pips of drawdown and you have 0.01 position size open, then you're only going to be in a $3 loss at that point. Now, if you have a 0.10 and you're 30 pips in drawdown, you're going to be looking at $30. So in terms of risk, you guys can already see it. Right here, you would already be in drawdown $30, and with this position size over here, you would only be in $3 worth of drawdown. So in terms of growing your account quickly, then obviously you're going to have to use something like max risk. But in terms of growing your account over a longer period of time, you know, it's totally cool to use minimum risk. This is actually what I recommend right here, is using minimum risk, because using max risk, especially as a new trader, you can start to put yourself in a pretty tough spot and you'll start losing money or blowing accounts. And there's just a lot of bad things that can start happening by just like continuously putting on max risk on every single trade that you take. So I wouldn't necessarily recommend doing that until you get comfortable with the markets from taking multiple minimum risk trades. So focus on only minimum risk for like, 2 months or 3 months or so. Then after you've built up your confidence, then you can start focusing on putting a little bit more risk on and then try that max position size. Now, in terms of if we had a $1,000 account, your max risk for this would be 1.0, so one standard lot. And then your minimum risk over here would be 0.10 again, so 0.10 of a standard. So one mini lot. Now, if we look at this and apply the same scenario, say that we are, we have a $1,000 account and we go 30 pips in drawdown with a standard lot size, then we are going to be at that point negative $300 in our account, at least open at the moment. So it'd be negative $300 if we got stopped out. At 30 pips, that would be negative $300 out of our account. So that would be negative $300 if you were to use a standard lot. Now, if you use the minimum risk and only used one mini lot and you had 30 pips, that would only be $30. On $1,000, $30 is significantly less than taking a $300 hit on your account. So again, guys, it's so much better if you're focusing on using minimum risk at first. Before moving over to that higher risk, you really want to make sure that you get your confidence built up and you want to understand what you're looking for in the markets. But if you don't know what you're looking for yet and you're trying to put on the max risk possible, then you're likely going to blow your account or lose money, and then you're going to think that this industry isn't for you. And that may be true. It's not for everybody, but if this industry is for you, you have to actually give it some time and practice, just like anything else. So test out using minimum risk for now, for at least a month or so, and then once you got your confidence built up, move over to the higher risk. With that being said, guys, that's going to be it for today's video. If you enjoyed this one, make sure to leave a thumbs up, and I will see you in the next one.
After this track, I might need me some lozenges. I ain't about to go soft. This rapping shit lately been pissing me off. Guess these words are kinda just at the tip of my tongue, but I'm still young and I hope I find the rhymes that'll live through time before that fat lady has sung. Cause when I'm inside this booth, feels like I rule the world. But I'll hop off my horse, hop in your Porsche, give it